Hey everybody, I hope everyone's doing well. This is the Emini overview of the 5-minute chart for Thursday, September 12th, 2024. On the daily chart coming into the day, it's hard to see on this time frame, but there's a small major trend reversal pattern going on in here, and it's more clear. Let's look at the 45-minute chart. So we have a bear trend, some exhaustion, and then we have a trend line break. So bears who were short down here, let me just see if I can get more bars. So here's our bear trend line. Here's our trend line break. We spent a few bars above the trend line, and you could also draw a steeper trend line like this. That's a more clear trend line break, and we spent a lot of time sideways. So the expectation is a retest of the bear trend's extreme down here. So we'll call it the close of Friday. And that's what we got, and we got a bounce. So the bears who were short down here, disappointed by the rally, they're looking to exit their shorts. And the bulls are expecting, or at least hoping for, a double bottom major trend reversal. Good signal bar, good follow through, more good follow through. So of course that's what we had yesterday. So that's the context. I wanted to point that out on the smaller time frame than the daily chart. And that's what's happening in here. Bear trend, trend line break, retest of the trend's extreme, and then reversal. Now I mentioned this tight trading range before. This was an area of agreement, and most breakouts of trading ranges fail, or at least fail to go very far. So here's a bear breakout, bad follow through, bear breakout, bad follow through, and then a strong reversal up. And we know how strong this also gets into. We can look at the 5-minute chart. We know just how strong this rally was on the 5-minute. This is controlled, sustained buying. And when you know that, look at the daily chart. If you're looking at this chart alone, you don't really know what happened during this bar. You don't know if the rally was consecutive buy climaxes with deep pullbacks. But the reality is we know that this was really strong buying all the way from the low of the bar to the high of the bar. And I thought that we would probably go higher and maybe test somewhere in the middle of this tight trading range. The middle of this range will be a magnet, and I think that's where we're headed. So I thought there was a chance, or I thought it was more likely we'd go higher today. I thought the bears would have to do a lot to reverse this, and certainly more than they did today. So on the open, the market is always in long, so it's okay to be long for any reason. Here's bar 1, doji. We went sideways for 3 bars, and then sort of a surprise bar on 4. 4 is the first bar testing the moving average in many bars, maybe 30 or 40 bars. The odds are it will be bought. We're testing the breakout point of the bar 75 high. That was a bad signal bar. So if you think about it, bad signal bar, 3 consecutive bear bars, probably sellers above, not a very strong stop order. Of course, the context is bad to be selling, but assuming a bear sold here or a bull didn't take the buy because of the bad signal bar and 3 bars to the downside, traders are trapped here. And so on any retest, the odds are there's support at this level. We went a little bit lower, but reversed up on bar 5. But bar 4 was strong enough for a second leg down. But because we're in the strong bull trend and we had trading range bars on the open on the first 3 bars, I think at a minimum we'll test the bar 3 low and have some sort of deep pullback before a second leg down. But I do think bar 4 will get a second leg. The only problem with betting that bar 4 will get a second leg, even though it's likely, doesn't necessarily mean it's optimal to trade it. Just like all the way up here, the bears were getting, these aren't great examples, these aren't quite like 4, but you could argue here 53, 54, strong enough bear leg for a second leg, but there's the second leg. It's more sideways than down. Same with here, except here you could say 1 pullback, 2 pullback, 3. So again, not ideal. Same with here, never got a second leg. But bar 4, enough of a surprise. Bulls who bought below the tight trading range, these 4 dojis, were trapped, and they'll probably look to exit and look to buy lower. Sideways on 6, then a low 1 short on 7, but bad context. Again, the first test of the moving average in a lot of bars in a very strong trend. We're still always in long. And then a vacuum on 9. It's possible that bar 9 is just a vacuum test of resistance. We're testing yesterday's high. But then 9 got follow through. So bars 9 and 10, we have a big breakout bar and follow through. But why is bar 10 so much smaller than bar 9? It's a little suspicious. It's not ideal. It'd be better if bar 10 was more like bar 9. So not ideal, but big enough breakout, strong enough for at least a second leg. And again, the context is really good for the bulls here. So this may have been a bear trap. Now there's support at the bar 8 high. That's a breakout point, or you can call it the bar 7 high. But bar 8's an inside bar. Usually breakouts of inside bars don't go far, and then they retest. So we'll keep an eye on that, the high of bar 8 level. And then a little sideways on bar 11, 12, consecutive inside bars. Bulls hoping it's an II trend resumption pattern, a bull flag, and we break to the upside. But bears who sold on stop orders here made money. And that's a warning that we may start to go more sideways here. We know that trends get weaker as they mature. So really strong trend through here, but eventually we're going to start getting deeper pullbacks. And when that's the case, the market starts to channel more. This is more of it's a really tight channel. But here, maybe the channel is more something like this, which is a lot wider than this. So bulls will look to buy low and then take profits above swing points. So a little higher on 13, but then 14, a bear breakout. Is 14 a major bear breakout? No, but it is strong enough for a second leg down. Bulls who bought below bar 13 are trapped. Bears who did not sell because it's a micro channel since bar 7 are also trapped. There's an imbalance. There's sellers above. And bar 14, you can see only maybe 30% of the bar, or even less, overlapped the prior bar. It's a pretty decent breakout. The problem is the regime and the overall context. We're still always in long. But you have to realize that 14 is strong enough for a second leg, so bulls may wait to buy lower. 15, we're retesting the breakout point, going sideways, and you can see resistance here, and then we go outside down 18. Probably going at least a little lower, but what leg is bar 18? Let me clean up the chart a little bit. It's possible that bar 18 is leg 3, maybe 1, 2, 3. And most of the bars, really only 1 or 2 bars, maybe 3 here, are closing below the moving average in a really strong bull trend. And in a strong bull trend, or in this case here, a channel, bulls are looking to buy sell-offs. Bar 4, it's a big bear trend bar, but bad follow through. The bulls bought. We went to a new high. Big bear bar, but we close, and then another big bear bar, but it needs follow through. And then look at the follow through. We tested the bar 8 high and then reversed up. 19's a high 2. You call it a high 3. 12, high 1. trigger the high 2 on 18 above 17, and then high 3 above 19. It's a reasonable buy. And then the bulls got follow through, but bar 20 is kind of like bar 10. Good bull bar, but then a small bar, and that's disappointing. And then another big bull bar, 21. So bulls, they see a buy climax, a pause, buy climax. At a minimum, they're expecting a pause. Bulls will probably take profits here, but that doesn't mean we're necessarily always in short. But the risk is that we have 3 legs up now. 1, 2, 3. So we may get a deeper pullback. The market is still always in long. It's still a bull channel. But we may get 10 bars and 2 legs sideways to down. So bulls, they take profits at swing highs, look to buy again lower. 22, it's a bear breakout, but did not close below the prior bar, but it did reverse bar 21. And it's reasonable to get out of longs below 22. It's a double top, maybe a wedge top. Probably still a minor reversal, but okay to get out of longs and look to buy lower. Follow through 23, but really just minimum follow through, not ideal for the bears here. 24, finally getting a close below the moving average. 3 or 4 bar micro channel, strong enough for at least a second leg, but I keep mentioning the context. This is such a strong bull trend that all of this is really minor and unlikely to lead to a major reversal. I think the best case scenario for the bears is a test of the low somewhere down here. And then we paused and pulled back on 26, and we're beginning a second leg down. So a bear spike, pull back, and we'll probably start channeling down here. So another leg down, another pullback, and then this is the start of a third leg down. And then we got a bull bar closing on its high, 31. This, I'm not sure the market ever became always in short through here, but if it did, then the bears, whether it did or not, the bears have to get out above 31. It's a bull trend. We're getting 1, 2, 3 legs down, and it's a double bottom with 19. And the bulls, they'll argue that 19 was a major higher low. It's a swing point. It's a higher low that went to a new high and closed at a new high on 21. So the bulls will defend this stop, and you can see they succeeded. The bears couldn't get there. The bears were hoping for a breakout of the neckline and then a double top, measured move down. But are the bears getting the job done? No, it looks like we're starting to go back up. This is either a trading range or a bull trend. We're still getting higher highs and higher lows, so you can still call it a bull trend. Bad selling pressure through here, good enough bull breakout for a second leg. Is this a double top? It is, but this still needs a second leg up, and this was already 3 legs down, a double bottom, or you could say 1, 2, 3, and still bull channel. So not ideal for selling. Outside up and follow through and more follow through, so the bull bar is getting bigger. The bulls, they've been taking profits at new highs all day, but the problem is the average daily range has been maybe about 70 points, and at this point the day's range has been, just under 40 points, so the range could still double. And based on all the context and the price action we're getting, is it more likely to double to the downside or to the upside? The bears will have to do something really strong to reverse this, and they've been getting bad follow through all day. And because of the strong bull trend here, this may just be a minor pullback. We're going sideways, but the always in direction may have been long all day, and it's more likely we go up here. A breakout 42, this may be a measuring gap. So the bulls will look at the start of the most recent bull leg from here to the breakout point here. That's a target. 5,600 is up here. That's a big round number. We'll probably get there. And then there's really no reason to sell here. It's always in long. The bulls are getting consecutive bull bars, and every little pullback is being bought. Bear bar, but buyers below. High one buy. Strong bull trend you can buy for any reason, and really just hold until there's a reason to exit. Consecutive trading range bars and an inside bar here. So possible final flag, the bulls might take profits around here. And for possible measured moves, here's a measured move of the opening range. You can see we're getting close to it. And then a bear breakout on 56, but we'll probably come back and at least test the low of bar 55, if not the body's the midpoint of this tight trading range. Bad follow through, and then we raced back up to this area, but this may be resistance at this point. The problem here for the bulls is the trader's equation, risk reward. 2 bars sideways, and maybe buy climax, pause, buy climax, pause, buy climax, pause, buy climax, another pause. So for the bulls, the stop might be below 49. Here's the market price. Is it 60% we're going here before here? It might be, but after this, not so much. And so the bulls, they may scale in, but in either case, they'll probably look to at least reduce their position size on a retest here. And then we're going sideways here again. And you can see the upside is really limited. 63, a double top. It is, but it's still minor. We don't have a major significant trend line break. And then a little bit of a surprise, 65, but probably profit taking from the bulls more than aggressive bears selling. And you can see exactly where we sold off to, the measuring gap breakout point. And then that was bought and we rallied. But this was enough of a trend line break to at least put the market into a trading range. We fell below bar 49 or 47 or 49, I'm not sure. Let's see. So these lows are the same. So this is the most recent major higher low, 47. The market fell below there. So now at this point, the market's either in a bear trend or a trading range. Does it look like a bear trend? No. Is there enough selling pressure for a major reversal? Probably not. Not enough bars, not enough selling pressure. This is getting okay for the bears, but they still need a retest of the trend's extreme. That's what we got here. We went a little bit higher. And then what about selling 76? You can argue it's a possible major trend reversal. We have a bull trend line break, certainly a trend line break here. That's a big distance on the breakout and disappointing for traders who were long up here or did not short. This should get a second leg. But only 40% of major trend reversals succeed. 60% of the time they become trading ranges or the trend, the original trend, the bull trend resumes. So low probability, sell below 76, but there's an argument to be made for it for the bears. But considering all the strong buying we've had, it's probably more likely a trading range at this point. And then we went more sideways into the close. And then for stop orders today, I thought you could buy above bar 8. Let's go back. So strong bull trend, and then big up, big down, testing a breakout point, and then a second reversal on bar 8. We're probably going to at least retest the highs. And then I thought 19 was a credible stop order buy. Okay to exit longs below 22, but not as good to sell. And then a wedge, double bottom. Probably the best stop order trade of the day above 31, or at least one of them. And the market's always in long all day. So it's reasonable to really buy anywhere and build a position for any reason. Bull breakout and follow through, and more follow through. Buy the close, buy for any reason. Strong bull trend. No reason to sell. It's okay to hold long. Exit below a bear bar, closing below its midpoint. And you could exit below 56, but it wouldn't have triggered here, and you would have had a chance to get out at this final flag trading range price. 63 is an aggressive stop order trade. Same with 64. 66 okay, but big risk and your reward might be limited. This looks like it's becoming resistance. So really not ideal to buy there. And you can see what happened. Instead, the market sold off. Bulls bought the 50% pullback of bar 66, and then we rallied. But still limited upside. That's about it for stop orders. So where do we go tomorrow? Actually, before that, the day type. Today was a bull trading range day. And you can see, well, okay, you can also call it, we can call it a bull channel. So it's some type of bull trend day, and that's more clear on the daily chart. You can see that's clearly a bull trend bar. But the reason I call it a bull trading range day is because here's the beginning of the day. Here's the end of the day. Even if we just use the bodies up here, market was in a trading range for the majority of the day here, and then a lot of the time here, and really just rallied between the trading ranges. And it's common that in the bull case, the top of the lower trading range becomes support. If you think about it, the market was in a trading range here, and you can argue, I mentioned this earlier, that's actually not a trading range. It's still a bull trend. We're getting higher highs and higher lows. But in either case, when you get the breakout to the upside, bears see that if they sold on a stop here, they made money. Sell on a stop, they made money. Here, made money. And certainly limit order traders are making money. If you sold up here, you would have made money. And if you sold at this high here, you would have made money. And so the bears selling at this high, they get trapped. And on a retest, those bears are going to exit, and those bulls who didn't buy or who know that the bears are trapped are also going to buy. And so that's where resistance becomes support. So where do we go tomorrow? Tomorrow's Friday, and it's going to try to influence the close of the weekly chart bar. The problem on the weekly chart, we know the market's in a tight trading range at this point. Lots of overlap here. It's possible we rally to the high of last week, but even if we do, there's probably sellers above last week's high. It's a bad high one signal bar. It's a big bar, and it's a bear trend bar. And so tomorrow, maybe there's another trend day. The market has been trending for the past 2 days in a strong bull trend. And markets have inertia, and Fridays have an increased chance of trending. But I still think the upside is limited because we're in a trading range. And the momentum's good for the bulls, but at some point the trader's equation becomes bad, and the bull stop is down here, you're long here, and you have to ask yourself, is it 60% that we're going up here before here? I'm not so sure, because there's a lot of trading range price action, and the upside is probably limited. This is going to be a problem, the midpoint of this trading range. However, we still could get up here. This was a strong rally. We're getting a pullback, but we still need a second leg up, and we could go all the way up here. But, in theory, here's a leg 1 equals leg 2 measured move all the way above 5,900, but the problem is all the overlap. The market's in a trading range, and breakouts tend to fail. And at some point, the bulls have a good profit. They bought down here, and they get back to an area of resistance. So we may go a little higher, but think about the momentum. You saw it today, how strong the trend was. On Wednesday, and then it got weaker today. Lots of trading range price action, good breakout, but then more trading range price action up here. And that's shown on the daily chart. Big bull trend bar, but then a smaller follow-through bar, so that's disappointing. Still not really a reason to sell for the bears. The bears are waiting to sell higher, maybe the midpoint of this range, but this breakout's strong enough for its own second leg. So the bears might step aside and we could vacuum up to the top of this range or even the all-time high. But as far as doing that all tomorrow, I'm not so sure. We would need a 127 point day, and there's some resistance to get through. You can see we actually started going sideways into the close of the day, and we were testing a bad stop order signal bar. This bull reversal bar was a bad stop order short, but it went all the way down here. So bulls who bought here, disappointed. Bears who did not sell, also disappointed. They missed the sell-off, and we may start to go sideways here. All right, thanks everybody for watching, and I hope everyone has a good rest of their night.